Markets absolutely flat, 14, 15 points now. Sonia.
All right, so let's get in our first corporate on the show now. Page Industries is on our radar. Remember, the company in Q2 had a volume decline of 9% sequentially as well. Volumes were down 1%. Kotak believes that this weakness could continue in the second half of the year as well on account of inflationary pressures. To discuss the demand and the outlook, and plus, cotton prices have seen a 20 to 25% correction from the top. We're now joined by V.S. Ganesh, the Managing Director at Page Industries. Mr. Ganesh, morning. This is Rima here. First, tell us, how is demand currently for you? How have the last 2 months shaped up, and what's the outlook for the next few months?
Very good morning to you, and pleasure to be here on this platform. Yeah, demand first half was excellent. You might have seen the numbers. It was excellent for us. And the consumer retail space is going through a challenging time, especially in Q3. So we are no exemption to it. We also going through it, but I feel we will bounce back in Q4. We are taking all the measures which are required for us to get back. There has been quite a lot of inventory in the marketplace, and we are taking a lot of action to correct it. So like any other retail consumer brand, we are going through that small tough period, I can say. But we are in the essential space, as you know. So this is going to be a short-term thing. As the inventory in the distribution gets corrected, I think we will pick up. We are all poised to have a great Q4, and we are taking all the actions that are required to bounce back.
Okay, so can you tell us what would the volume growth be like? What are you expecting in the second half of the year? Because in Q2, your volumes went down by about 9% quarter on quarter, and it was barely a 1% growth year on year. Do you hope to see single-digit volume growth in the second half of the year as well, or could it be better than that?
It could be better than that. Let me also give you a perspective as far as Q2 volume growth is concerned. It may look muted. That's because if I exclude the mask, which was very much there during the last Q2 of last year because of the pandemic, and that was something which is to do with the pandemic. And if I remove the mask category, we actually grew 7.7% on volume, which of course is not where Page usually is. You know, we always have a very robust volume growth. I think we will do very well in Q4. I do expect that we should be in the same good trajectory as we used to be before.
Okay, and we certainly hope so. Sorry, you said 7.7% in what period, Mr. Ganesh? X masks?
I was talking about Q2 volume growth compared to last year.
Got it. And
if we remove the mask,
got it. Naturally.
Then we have moved up 7.7%.
Naturally, and maybe masks are coming back. I don't know. I mean, with these cases.
It looks like to be frank, Krishan, we don't want them to come back. But
absolutely.
Fingers crossed.
Now, Mr. Ganesh, you said you're expecting a very strong fourth quarter, right? What is that on the back of? I mean, because that is just now, right? Jan to March. And second, cotton prices have come off some 20-25%. What kind of gross margin improvement can we see?
Okay, so to answer your first question on the fourth quarter, there are a couple of things. One is the enablers which we are putting in the market. You know, the pandemic meant that the inventory health in the supply chain was not all healthy. There was so much volatility, demand shift at a category level, and there is a mismatch as far as inventory is concerned. We are taking all the actions to correct it. And therefore, I feel the traction will improve in Q4. That is one. And the second is last Q4 was not generally all that good because there was this fear of GST coming in. And people wanted to hold, and the distributors were not buying much. So if I look at the last Q4, our performance, and now I feel everything will be normal, I think we will be able to record very good growth.
Margins,
and coming to the cotton, yes, we are keeping a close eye on this. Cotton was 104,000 rupees per candy sometime last year. It has come down to 65,000. I personally believe it will be in that space for some more time to come. And mills are under tremendous pressure. They are all making losses, so especially the spinners. So I feel the prices may go up a bit if there is a higher demand. It all depends on how US pans out, and if there is much more improvement in exports, then there can be a slight increase. But I don't see cotton price increasing to the old 104,000 levels. It may have a slight increase. I am also keeping a close watch on this because the area covered for cotton is higher this time. The acreage and the monsoon was very good, so the crop is supposed to be very good. So I have a feeling that we may be holding at that 64,000 range.
Okay.
If it does hold there for your gross margins, what does it mean?
Well, we did consider this when we did the budgeting. So when we did the last price intervention, we didn't want to outprice ourselves. So we decided to have touch the price considering a lowering of the cotton price. So we already considered this when we had our last price intervention. So it may mean that, even if the cotton prices move up a bit or something, we may not have to quickly intervene and touch the MRPs. We can hold where we are today.
Okay. So you don't see an increase in the prices even if cotton prices move up from current levels.
In the immediate future.
In the immediate future. Okay. But gross margins in Q2 were 56%. Will the gross margins be higher in Q3 and Q4? And just one more point. You said in Q3 you will be impacted or you're not immune to the tough consumer retail spending outlook currently. How bad is Q3? How much lower are the volumes compared to same time last year as we speak now, sir?
So Q3 is still not over, so I don't want to give you specific numbers. But
in the first 2 months of October, November?
It has been softer than before because of the pressure which we all facing. But this is also compounded by the fact that we are also implementing auto replenishment system to the distributors to improve the hygiene of the inventory. We want to make sure this, in the long run, this is the healthiest thing for us to do. So we are actually taking those actions. So we are looking at the long-term interest of the business rather than a quarter to quarter. And we are holding fort as far as implementation of that is concerned. So it's just a temporary pain which we need to go through to have a good health in the long run.
All right. So if you're sitting on a run rate of around 1,300 crores per quarter now, at least 1,300 crores is what you did in Q2, which means about 2,500 crores for the first half of the year. For the second half of the year, considering that there are inflationary pressures, there's competitive pressures as well, what kind of revenues would you eke out compared to the 2,500 which you've done in the first half? And do you stick by your target? I think you had earlier said that in the next 4 to 5 years, you're looking to do about 10,000 crores of revenues. Is that something that you would hold on to?
We definitely will hold on to. In fact, internally, we are trying to see how we can accelerate that.
Okay.
Because we have a long way to go. It's a very underpenetrated category. There is much more consumer awareness. And the economy is growing so well that, we need to expand very rapidly. We are taking all actions to expand our capacities, be it in supply chain. The retail expansion is on track. I think we will be adding around 15 to 17,000 outlets this year in the MBO space. And EBOs, I think we will be ending at around 1,300 EBOs.
Okay.
And you will see much more buzz on the EBO space as we move forward, because the rapid pace in which urbanization is happening and the growth of the economy, we feel we need to move faster, and we are taking actions to increase this run rate as we move forward.
All right.
To
So
answer
just
your
a quick,
question,
just a quick follow-up. So you said 10,000 crore revenue target over the next 4 to 5 years is what you're holding on to. You also said that you're looking to expand your capacity. What is the capacity at currently? And over the next couple of years, how much capex would you put on board? What would be the funds that you're putting on board as well?
Okay, our current capacity is around 265 million pieces, garments which we are producing and also outsourcing. We are increasing this, and we have a robust plan based on the 5-year plan which we have. And our capex is generally around 200, 210 crores or 250 crores a year. That trajectory will continue, and there will be a balance between capex infusion for expansion and outsourcing. We also outsource around 1/3 of our products with our chosen vendor partners, and they will also be expanding along with us. So with that, we will be able to meet the long-term demand.
All right. Mr. Ganesh, great to have you with us here. Thank you so much for taking out the time and being with us on CNBC TV18. And I hope, we're able to do this on a regular basis. It's great to have you.
Prashant, a pleasure talking to you, and let me wish you a Merry Christmas, Happy New Year.
Same to you from all of us here. Thank you so much for joining us.
Thank you.
Okay, we'll take a quick break here. We've got the market, which is down 11 points. So all of the gains are gone, and some more, some 80 points off the high point of the day is what we have. We are back, and we have a discussion on banking lined up next. Financials, basically. Saurabh Kumar of JP Morgan will be with us. We'll throw questions on public sector banks, what happens to these names from here. And of course, we'll talk about private banks as well. Later, we'll connect with Anjan Chatterjee of Specialty Restaurants to discuss their fundraising plans post their board meet, which took place yesterday. Stay with us.